Today we have the pleasure of speaking with Jeffrey All, the CEO of the Pan Jamaica Group, and it's going to be another great conversation. We start things out by learning a little bit about his background in law, his background in companies that would have led him on the path to being the CEO of the Pan Jamaica Group. When I talk about his perspectives on investing for value versus speculation, I thought that was interesting. Then we're going to talk about the Pan Jamaica Group and break down the different segments that the company operates in, how he views their overall strategy in terms of acquisition of companies or adding companies within their portfolio. And then we're going to close things out by hearing a little bit about his personality, his productivity, his investment strategy. So it's an overall great conversation, one that I enjoyed greatly, and I'm looking forward to your feedback on it. So let me know in the comments during this premiere, what your thoughts are. Let me know if you have any questions for Jeffrey or the Pan Jam team, and we'll share those with them. Thank you so much for watching this video, and let me know your thoughts on what we discuss. So welcome, Jeffrey. Thank you for joining us.
Thanks, Jerry. Good to be here.
Yeah, so we've been waiting as a community for this discussion for a while. When I saw you at the airport, I thought it was a great opportunity to meet you. I'm a big fan of the work that you do, and it's just I'm really looking forward to this conversation.
Likewise, it's good to know how opportunistic you are. It's always impressive.
That's definitely something I tried to take advantage of. So let's start with understanding a little bit about who you are. Who is Jeffrey Hall?
It's hard for me to say much more than the public bio that you have. Other than that, I think of myself also as a family man, father and a husband and a son, and that's important to me. But the public record obviously speaks to my career, which has been centered in Jamaica and public and private enterprise, I guess, in the law. Those are the touch points that we can dig into.
Yeah, yes, definitely. I like to ask, about all the other things, right? Because a bio is typically a little bit formal. And I like to get to know the person, right? What do you do on weekends? What do you do in your spare time? I know you are a man that serves in a lot of capacities, so I'm definitely going to ask you about how you manage that a little bit later, but it's always good to know, what are the things that drive you as a person, right? Are you into sports? What hobbies do you have? Anything like that for you?
My most passionate hobby is business. Sorry to disappoint you.
No, it's
they
not.
say that a person who loves their job never has to work a day in their life. So I don't really need that much recreation, to tell you the truth. I'm having fun right now.
Okay, no, that I completely
I
understand.
travel quite a bit, but even there, it's business and pleasure. So for me, it's a seamless web.
Okay, cool. That's I definitely I like that. I agree with that. I find where personally my family pulls me in the direction of balance, but I remember when I was younger, I would be just work nonstop for me, but when family is there, I try to still have that sort of I say balance, but it's not 50-50, right? I'm sure you know that part as well. So yeah.
To appreciate that, I don't really see it as work.
Yeah.
So if I wasn't paid or I wasn't earning money, I'd still find enterprise, the people involved, the products we make, the services we offer, the economic environment which you operate, all very fascinating. And that's what I do for fun. not having fun is exercise, and the rest of life. But I am a committed family man, and I do find that to be a lot of fun too, and mostly around travel.
Okay, I completely get that. So tell us a little bit about your history, your path to CEO of the Panjam Group.
Well, I started life as a lawyer in a Wall Street law firm. That's a law firm that deals with money center banks, doing securities offering, banking deals, large scale M&A, that sort of thing. And my first degree is in economics, and I also did a master's degree in public policy, focusing on public finance and international trade, international economics, things like that. So I started life in New York as a lawyer and found an opportunity, public policy, not long afterwards in Jamaica at FinSAC, which was then charged with intervening in what was then a troubled financial services sector in Jamaica. Some people recall that around about 25 years ago, what constituted maybe 70% of the financial sector was in crisis, and the government had to intervene to protect policyholders and depositors and other beneficiaries of the financial system. So I took a leave of absence from my New York law firm to see how I could help out with the government of Jamaica. The goal at the time was to do deals that rescued the sector. And that was a very active and intense period. It exposed me to some of the biggest deals of the era in the Caribbean as a whole. I did that for a little over a year, and then found myself in private equity with a bunch of friends from my university and graduate school era. And then observed that there was a succession opportunity at Jamaica Producers, not imminent or immediate, but I could see that that business needed to be reinvented. And I thought I could help. So I joined Jamaica Producers, which was then heavily oriented to the banana business and to fresh fruit. And essentially we pursued an M&A strategy to turn that business around, because it wasn't a competitive business to be at that time in the banana export business. And so we pursued over a 20-year window, 15 of which I was CEO, a strategy of separating ourselves from the traditional businesses that were no longer competitive and doubling down on the parts of the business that could be competitive, which, as it turned out, were a range of food businesses and logistics businesses. And we were able to take the capital and double down on M&A in those two segments. And that led to a pretty successful strategy that compounded the shareholders' equity by about 15% a year up until the moment when the Panjam deal came together. I became CEO of the combined enterprise that includes the business of Pan and the businesses of Jamaica Producers. We now call the combined enterprise the Pan Jamaica Group. So that's a kind of nutshell as to how I got to this point.
Okay, so it's interesting. If you weren't, I guess, on the path that you have been on to be CEO of the group, would you still be doing law? Is that I guess sort of maybe the alternate universe as to what you're doing right now?
Well, I do law now to some extent. You know, obviously, very much led and supported by in-house and external counsel, but we do a lot of deals. So we're always buying something or selling something, and have been nonstop for 20 years in one form or another. And that's essentially what we do as a business. You know, it's a very acquisition-centered business. So to say I would be doing law would probably not have big enough leap of departure from what I'm doing now, even though the law I'm doing is really as a client rather than as a counsel. I think if I had to fundamentally change gears, maybe be a high school economics teacher. That was something special to me. I enjoyed. It was one of the few areas which I did exceptionally well in high school. Most of the other areas I did exceptionally badly, and it would be an opportunity to revisit that high point. So I like economics, and probably would find the high school level or maybe undergraduate level a place to make an impact.
So I did actually. I was told that in my research for this interview that you do have a love for economics. How would you relate or I guess share the importance of economics for the average investor? Because it's something that I don't really think a lot of them focus on. But based on your experience and knowledge, what would you say to just encourage them to maybe spend some time learning a little bit about that side as well?
Well, there are lots of different approaches to investing, and I wouldn't sit here and say that the approach that I take is the only approach or even the most logical or most remunerative. But the type of investing that I like to do involves an assessment of what I would call economic fundamentals. And so I'm very much driven by a view on rational outcomes, rational in the sense of a perspective on intrinsic value, as well as to some extent, although less so, on macro fundamentals or macro themes that you can use economics as a way of interpreting. But for me, economics is not really just a way of investing. It's really a way of living, of understanding utility, of measuring one opportunity against another, of organizing your thoughts. And so for me, it is an investment tool, but it's also a tool for underlying business and reality in general.
Yeah, I agree. I've always been fascinated by the topic. I don't consider myself to be an expert, but I certainly watch. So, for example, there is this platform that I'll look for courses on, and they have like an economics weekly that I'll just listen to some of their weekly nuggets on just understanding just the terms in econ, what is said, so some of the things that are discussed, and I find that it helps me to understand some of the things that would be shared from like a governmental or policy level, right? That's a lot of it I still don't understand, but it seems all interesting to me because I know that this is how decisions are made on a country level, right? So I think it's just always very important to know just enough where you can be at least have a conversation on it. And then, of course, if you have a passion like you do, then, of course, you can spend more time going further.
Sure. I mean, there are parts of economics, of orthodox economics, in a more conventional sense, that exclude me from types of investments or types of opportunities of other people who are not focused on a kind of a rational expectations model or view of intrinsic value. People who have different methodologies, they'll see opportunities that I don't naturally see and that I'm not that interested in. So I'm not that interested in speculative opportunities or opportunities that depend on the bidding up of value simply because other people think they see value there. Now you get in and out of lots of opportunities successfully based on a speculative view of the world, and people are doing that. And you can organize a business and organize your public discourse to motivate public opinion to believe in that which you're selling at a financial level, not the product. And that's a way of doing business that I, again, don't find particularly interesting. So what I find very interesting is value investing, and I find very interesting looking at what I would call real economic fundamentals and looking at intrinsic value. which is really just a part of economics, because economics could lend itself to the assessment of more speculative opportunities, but they're just not as entertaining for me. And I would tell you that we do need a diverse range of perspectives in order to make the world go round. So I'm good with that.
Okay, I was going to ask you, because there are some who believe that all form of investment is speculation. So, what would you say to somebody who thinks that?
I would say that there's some truth to that, and my comments really were a question of bias or degree. I would say some types of investment rely much more heavily on a speculative view of other people's assessment of the value of the financial assets. So, and other businesses or other investment models or ways of working may depend to a greater extent on people's interest in the underlying assets. So obviously, I could have a business model that doesn't have any tangible net worth, but relies on me persuading everybody else that in the future there may well be some. And I spend a lot of my time trying to figure out how to persuade people of that, and very little time trying to create a product that might be valuable to them or an asset that might be valuable to them. But I would spend most of my time telling them what the future might look like. I find that less interesting and less motivating than spending my time actually building something like sell. And then once it's sold, it would deliver a return that you might see quite tangibly and choose to invest in it. But that's your fault, and be one of the perspectives that you might have, or people who are looking at this show might have, is that I have a public responsibility to clarify the future for the Pan Jamaica Group or any other group in which I'm invested or have an executive responsibility. And maybe I should spend more time doing that and hyping the stock than I do, worrying about stevedoring at the port or making food products or supporting our property investments, etc. It's a bias.
Well,
it's a question of degree.
I think that it's interesting, because I do agree with you where there are, when you said there's a place for different perspectives, I do believe that, especially with the success that you've had as a company, with the companies you've managed, that clearly, your mindset, your outlook, your way of growing the business works, right? By most, if not all, the measures that one would use to measure the success of a company, right? So I think that, just as how there may be different perspectives, there are investors who look for different things, right? So, I think that's what I would say to you, to what you said. And I think that there's a place for focusing on value. I think there are some persons who may think that the nature with which speculation may occur in our market maybe a little bit too much in terms of to one side, where not enough persons may focus on value. And this is a conversation I've had with multiple CEOs where, they may be saying, well, is the market really doing more speculation than looking at value? Because, maybe they think that their companies aren't trading in, closer to what would be considered fair value. So I think it's an interesting discussion. And I think that the way in which, to me at least, a CEO manages his company shows how he views investing, right? If he focuses on delivering performance, growing the business, inorganic growth, etc., that's what he believes, by his actions and his leadership. So I've just always thought that was interesting to see that. But of course, I'll always ask explicitly, which I do plan to ask you. So I've always thought that dynamic is interesting.
Well, that's our business model. I don't really cast judgment on other business models. I think they have their place. If you look at, I think the business model that we think we're pursuing will have, we hope, a more sustainable trajectory. But there other business models will have short-term opportunities to deliver success, and as an investor, you can choose from among the options available to you. So, we have no issue with those who run, as a question degree, a more speculative story on what they're offering.
Yeah. The last thing I'll say to that is the issue with companies that are ideal for short-term opportunities. Some of the investors aren't aware that it's a short-term opportunity, and they may be looking to invest in a company long-term when really there's not maybe enough substance behind the company or the business model, as you would say. So that is also something I've noticed where it's just interesting to observe how our market in that way. And we do have thousands of investors in our community who will talk about their strategies, their points of views, etc. So it's an interesting conversation, one I'm sure that we can probably spend a lot of time talking about. But
I won't slow you down, but the duty to clarify is on both sides. So from our perspective, it's conceivable that we have a duty to let people know that the kind of sustainable value that we're trying to create at times may be less attractive in the short term than you could get if you were to pursue, one of the stories that depends more on a speculative view or what people might colloquially call hype. And so, we have to help our shareholders to understand that we're building something for the long term. And there may be eras or moments in time in which you're not going to get the share price movement that you get from a more speculative short-term stock. And we can explain the reasons why, And so I think both parties have a duty to tell the truth and to explain their story.
I agree 100%. And I think when we met at the airport, I was saying to you that our goal is to simply just educate the market because we believe that the investing public is still just a really small fraction of our country overall. And so there's a great opportunity to have more persons participating in investing. And if we are able to lay that foundation, maybe 5 years, 10 years from now, we'll have a market that shows more diversity in terms of how it invests, and more participation will lead to, I guess, more just seeing it more diverse instead of maybe being skewed to one way for some companies versus the others. So I do agree with you. You have your part to play. We have our part to play as persons who are seeking to educate the market. And so everything is meant to work together. So that's I think a good way to close out this.
Yeah, that explains why I wanted to be a high school economics teacher. You got me.
Exactly.
That was a detailed answer.
Yeah. So we have here a brief description of the Pan Jamaica group, and I'm definitely going to ask you to kind of help us to dig into it a little bit more. But it says here in your report, the main activities of the company, its subsidiaries, collectively the group, constitutes of joint ventures, and associates are property management, hotel management, port terminal operations, shipping and logistics, specialty food and drink manufacturing, agriculture, financial services, and the holding of investments. A lot, right? So help persons to understand, I guess, just the full scope and diversity of the Pan Jamaica group. I imagine that some of the companies in your portfolio, the average person may not be aware of. So if you could also help us to understand, some of the brands that you manage.
Jermaine, it sounds like a long list. And I would probably think about it in buckets, of which there are 4. And then there's one last catch-all bucket, which is a bunch of things that we need to rationalize over time. But 4 really big buckets, and the way that I think about the business is that we're in the property business. I'll tell you what that means in a second. We're in the global services business, and that means that we provide services that have some kind of Caribbean nexus but the services are really offered to the world. And the dominant share of that is logistics. And I'll say what that means in a second. We're exposed to the specialty foods business, and that for us means a portfolio of businesses that have a relatively large market share in the things that they operate in, but the markets are not necessarily large by world standards within food. So they're relatively niche markets, hence the word specialty foods. And then the final bucket is financial services. And so our goal really is to cause those 4 categories of businesses to benefit from a network within categories of businesses and to benefit from a network across those businesses. So the good news for me is that ones that have a pretty high level of exposure to Jamaica are pro-cyclical. And by that we mean that as consumer confidence in Jamaica improves and as the benefits of a relatively low unemployment rate and a comparatively to our history, a relatively strong growth environment, relatively strong reserves, and economic stability, the removal of macroeconomic crowding out and a stronger capital in the country. As this country gets better, the portfolio of things that have exposure to Jamaica, almost by definition, will do exceptionally well because they already have a strong installed base and they're going to build on that base and generate returns. So the ones that have heavy exposure to Jamaica would be logistics, where Kingston Wharves is a multi-purpose terminal. So it handles the grain that comes to the country. It handles the 99% of the automobiles that come into the country. So if you see traffic on the road, you know that we're well invested. It handles lumber, steel, consumer goods, containerized cargo. And so our logistics business is integral. Now, it's not just Jamaican. So we're quite diverse in that we also operate a shipping line that leaves Europe and calls the Eastern Caribbean, Colombia, the Dominican Republic. We also own freight forwarding operations in the US and the UK that consolidate cargo that can generate value from e-commerce and other types of shipping businesses. So it's a diverse business, but very substantial exposure to the Jamaican economy. The property business, again, very much pro-cyclical as you'd expect in property generally, but we have very marquee properties that help to define our capital city. Places like Manor Park and our investment in Scotia Centre, our hotel investments in Courtyard Marriott and the Rock Hotel, maybe 500,000 square feet of urban New Kingston property. So the property business is very structured. We're building around assets in downtown, assets in New Kingston or Midtown, and assets in Manor Park or Uptown. And those clusters strengthen on themselves. But we're going one step further as we're beginning to build out infrastructure that supports the city in power and water and things like that. And then again, the exposure to Jamaica is our interest, our 30% interest in Sagicor. Sagicor is a market-leading financial institution in a number of important segments. But those segments, I think you'll see, will benefit from the growth that we're seeing in Jamaica and the potential growth that we see. So largest asset manager, pension funds, mutual funds, collective investment schemes, largest life insurer, largest health insurer, third largest bank, top 3 by profits, general insurance, property and casualty, P&C insurance, money services, very diverse financial services base, and we've got 30% interest. Obviously, from a very strong partnership with Sagicor Financial Corporation that has 49%. And so we believe that group and the financial services group is significant. And then obviously we have our Caribbean food businesses, and those two are pro-cyclical, although the largest share of the food business is our group of businesses in Europe that are in premium products. So very different, and I would say diverse range of business relative to that we do in the Caribbean. Our specialty food business is a business we've been in a long time, so we know it very well. In fresh juice, that's the largest share of our revenues, with manufacturing plants in the Netherlands, Belgium, and Spain. Also in the Caribbean, have exposure to our bakery business in Jamaica, our snack business in the Dom Rep, which serves the Jamaican market, as well as our Spanish language markets, our water bottling business, our ice business, our farming business. So the fourth bucket is food, but by far the largest share of the food business is Europe. So it sounds like a long and complicated list, but for us it's four businesses that each have a very clear and rational strategic plan. Pan Jamaica also has exposure to a number of other businesses that, we can describe the rationale that underpins them. Exposure to other shipping activities, exposure to other hospitality-like activities, exposure to other services that are global services. Those are smaller stakes, but they're part of the enterprise. How is that for an attempt to synthesize
that is
that for you?
Quite a comprehensive overview. I think I understand your company a lot better now than I thought I did. So that was helpful. So what you have described in terms of that overview of companies, I imagine that, and you alluded to this before, where M&A strategy for you is a big part of your business. So most recently there would have been a joining of Panjam and JP. Can you talk to us about that? What would have went into that? Help us to understand the process of merging two companies of their respective sizes, and is that process now complete?
So the short answer is it is complete, and the longer answer is that the underlying logic of the deal is that these are two companies that know each other reasonably well, having done business together. We actually acquired, as 50-50 partners, Mavis Bank Coffee Factory in 2012, so 11 years ago. And we did phenomenally well with that deal. We bought it from the government together for about 900,000 USD. And then over the course of 4 years, took out about 4 million of dividends. It was a loss-making company. We turned it around pretty quickly, and then sold it 4 years later for $15 million. So we had a good story together. We worked well together, and we also discovered that we were very compatible. A strong belief in good governance, a strong belief in integrity, and a commitment to permanence on the Jamaican landscape. And so we both describe ourselves as holding companies. I would say that the emphasis of Jamaica Producers Group was to a greater extent on operating enterprises and a more diverse range of enterprises. And the Panjam business would have described itself as having a bias towards investments. And what we felt is that if we put the two businesses together, we'd benefit from the combined leadership of the two enterprises, and that's, we believe, come to pass. But in addition to that, the diverse range of businesses would make the combined enterprise even more resilient than it had been before. It would have bigger engines and more engines under any circumstances. And I think when both businesses look back over the last few years, we felt that was highly desirable. The final thing that we see is that there's some network value across the businesses that we have yet to harness. There are relationships across the businesses that we have to harness. There's the exposure to the capital base. There's the efficiency of the corporate operations, of the financial control frameworks that we apply across the businesses. So the logic made sense. We brought the business together, and we've quickly ensured that we have an operating framework that works and a team that is getting along very well. So that's our story. And that's the 6-month project, essentially. From April 1st was D-Day. And I would say that our view is that by September 30th of this year, we had established the operating framework for going forward as one combined team. And as at December 1st, we would have established a budget and an operating financial framework that will drive us going forward, which we're very satisfied.
Okay. So I wanted to get some insights into what it takes to accomplish that type of business integration, because I imagine it sounds like it was, an ideal strategic move. Is it always that for you? Is it where you look to see what businesses would be a complement to what you're already doing, or can it be different things for different situations? So help us to understand how you would typically approach an acquisition of a brand or a company into the group.
Okay. Amalgamation gave rise to the Pan Jamaica Group. I wouldn't characterize it as in line with our conventional M&A playbook. I see the amalgamation of Jamaican producers and Pan Jamaica Group as creating a bigger holding company from which to continue to deploy the base M&A playbook. So the combined enterprise is now worth, at the level of shareholders' equity, call it $500 million USD. And so that's a relatively meaningful place for them to do more deals. And no single deal, even at the level of, say, $50 million US of equity, is a bet the company risk. And so that means that we can, within our risk appetite, which is relatively constrained, we can do bigger and more important things. The question that you ask about our M&A strategy, so that is at the level of the Pan Jamaica Group, what can we do? What should we be doing now that we're together and can do these bigger things? So what we look for in the M&A strategy, essentially, are businesses where there is intrinsic value. And by that I mean that we're not looking for businesses that have heavy key man risk or are very much dependent on some special sales genius or something like that. So we look for businesses that have capital that produces results. We look for value, and by value we mean that the cash flows that the business produces give us a return that's better than money in the bank, risk adjusted. And so, we're not obvious investors in startups. We're much more comfortable with businesses that have some level of demonstrated capital that produces a cash flow based return. Now, we do turnarounds, and many of the deals we've done have been loss making, but before going in, we've had a detailed zero-based budget that tells us we pull this lever, we're going to get a result relatively quickly. If the lever is financial, such as a debt restructuring, that's relatively easy. If the lever is at the level of its cost base, where you're merging factories or you're procuring efficiently, that's also relatively easy. If there are new markets, but the markets are known to us, and therefore we can access them by pulling a lever, that's also good. And we've done all those things. But all of them require to start life with a very detailed financial model where we know going in that within a 12-month window, we're going to pull a lever and get an ROI or return on investment that's cash-based, that's better than money in the bank. Once we've bought the business, Jeremy, our model is to put in place a governance framework. is pretty rigorous. And that governance framework involves having a monthly review of the operating performance. So if it's a manufacturing business, we want to understand, plant productivity, labor productivity, yield on the raw materials at a pretty granular level. It's business specific. Obviously, if it's hotels, it's occupancy. You can, go on and on. But in addition to the core operating metrics that we talk about monthly and we care about in a very detailed way, we're not, in our own minds, narrow financial owners. We're interested in our businesses at the operating level, and we're interested in understanding their core operating metrics. We do have a common financial reporting and financial risk management framework. So we want to know they reconcile, their books effectively. We want to know they've paid their taxes, that they've complied with their statutory requirements, that they have a cash flow forecast and are going to run out of money. So we bring a very strong business by business interest in their operating frameworks and a zero-based business model, and we overlay that with a pretty templated perspective on hardcore financial controls. And that's worked more often than it's not. So it's given us a good result.
It definitely appears so. And thank you again for that, because I think I understand and I can see, it makes sense that you are where you are now as a group. It makes sense the companies that you have in your portfolio, just from what you've described in terms of what you're looking for. And it makes sense because it sounds to me like what you try to do is essentially minimize your risk as best as you can. And you're looking for companies that can essentially add value to its shareholders through, being able to generate positive cash that you can, distribute or use it to fuel, further growth. So it sounds like a very well thought out and, deliberate strategy.
Our best deals, though, Jermaine, despite your views, which I share about trying to minimize risk, our best deals have been actually loss-making enterprises. When we bought into Eastline, a 50-50 deal was loss-making. Mavis Bank, I mentioned, was loss-making. When we bought our juice business in the Netherlands, it was loss-making. And those deals have delivered phenomenal returns for shareholders. We've done very good businesses that had significant upside. Kingston Wharves, when we invested, was earning $853 million a year. Last year, it came in, north of 2.7 billion. And so, we've gotten growth stories and we've done turnarounds, but the playbook of observing obvious intrinsic value and knowing there's a lever that can be pulled within a relatively short time frame that delivers a cash return, that's something that we don't really plan to deviate from in the short term.
Okay, makes sense. And I do see where it would make sense, where the company may be making a loss now, but as you said, it could be ripe for turnaround. And so even though it's loss making now, you see where with your expertise, implementation of different systems, you can turn that business around at some point. So even if it's loss making now, your bet is that it won't be loss making forever. So you'll be able to, recover that at some point and then lead it to a positive state. So it's very interesting, very, very interesting. So I wanted to talk a little bit about your Q3. That was your latest report as a group. Congratulations on 2 billion in net profits. I just wanted to hear your thoughts on your performance for the quarter and for the year, and what maybe we could look forward to in terms of how you may close out the year.
The performance you're seeing in part a reflection of the combination of the two businesses. Whereas if you look at the prior year for the Pan Jamaica group, you're looking at a sort of result that didn't include the combined enterprise. The group is strong. All of the segments that were reported in Q3 are better than the prior year. And I think the underlying business is healthy. Q4 will have some noise in it, to some extent, based on the nature of how you account for a deal like this. But what I would say is that at an overall level, the business is strong, and our expectations are for improved profits in 2024 relative to 2023, with no particular enterprise seeing any one-off impact, but more just a core underlying health of the business.
Okay. So, well, it may be too early to ask. I was going to ask you, what does the future look like? But then I also want to ask you, are there any companies now that you see that fits the mold of what we're talking about before in terms of, ideal for acquisition or integration or even partnership for the group?
So, I mean, the core of the Jamaican assets are, and to some extent Europe as well, but in a slightly different way, but they're pro-cyclical. And so if Jamaica starts to have a slightly looser monetary regime, I wouldn't say regime, but the actual interest rates and liquidity levels are higher, and we shift from constraining inflation to a bias towards growth, I think you'll see a very nice positive impact on our businesses, and you can evidence that by looking backward at the enterprises. Now, obviously, we're quite diverse, so within our businesses, there are parts of the business that actually do benefit from relatively high interest rates. But what I would say is at an overall level, exposure to property, to ports, to financial services means that if Jamaica is doing well, we're going to do exceptionally well. As far as deals, my expectation is that in the next couple of quarters, you'll see a bias towards more bolt-on acquisitions than any single big deal. But those bolt-on acquisitions are very important for us. But big nowadays for us is relative, because the enterprise is pretty substantial. So when you're carrying asset base, and that's net tangible assets, I'm not even talking about how you assess market capitalization or anything like that, of around about $500 million, and you assume that you want to drive return leverage, to move the needle dramatically by your standards, you're going to have to do a pretty big deal. So it's not standard operating.
Okay, I do understand. So, okay. So essentially, what I hear you saying is that, of course, based on the diversity of the group and how some industries would be tied to, I guess, the state of interest rates, state of the economy, etc. I wanted to ask you, what's your outlook on how things may progress in terms of the economy, right? Where do you see us maybe in the next 12 months in terms of interest rates, and what are you expecting?
Well, I think structurally Jamaica is in a good place, and will all the usual underlies that we talk about, record low unemployment, relatively strong reserves, government surplus, 20 or so quarters of continuous economic growth. I think those speak in favor of a strong economy over a reasonably long period of time to come. There'll be, for sure, there'll be ups and downs, and the economic environment is still concentrated, even though we're more diverse than we might have been, say, 10 years ago. But we are still exposed to shocks. But we like the economic environment. We like the emphasis on private enterprise and the deployment of private capital as compared to public capital. And so I would say we have a positive view. That said, we're planning for interest rates to stay relatively high, and by relative I mean relative to pre-COVID, for next year.
Okay. So if it stays the way that you're expecting, is that good for the group? Is that bad for the group? Or are you building your business in such a way where it really doesn't matter? It's more of if it lowers, then you might have more growth than you projected, but you're still, planning growth either way.
So remember, I'm a lawyer, so I was a little bit precise. I didn't say what I was expecting. I said I was planning for relatively high interest rates, and I defined relative as immediately prior to COVID. So I would say that for us, that means that we will retain some liquidity, and we will do things that procure or harvest liquidity in ways that we probably wouldn't have immediately prior to COVID, where we would have been more aggressive in borrowing money and using leverage to invest. There are parts of our business model that do from really high interest rates. So there's parts of financial services, for example, that provide good services even where there are really high interest rates, and do so profitably. But I would say that substantially all of what we're doing right now, Jermaine, really has a long-term perspective on Jamaica. We're not making short-term trades. We're really building an enterprise, and that enterprise presumes that Jamaica will do relatively well over the medium to long term. So we are, in all of the segments in which we operate, we're doing what are called bolt-on acquisitions. We're buying things that make the businesses stronger. And in general, that strength is relying on the Jamaican economy.
Okay.
Actually, the exception to that is Europe, where we're buying businesses as bolt-ons that will benefit from some modulation of inflation, and hopefully some regaining of consumer confidence that was lost in the war, or immediately at the start of the war in Ukraine. I'm speaking about.
Okay. So I wanted to close out by focusing a little bit on Jeffrey, the investor. So what type of investor are you outside of Panjam Group? Are you into equities, real estate? Are you investing in the US market? How do you view your personal investment strategy, and what can you tell us about it?
So I definitely invest in the things that I'm working on. So I eat my own cooking. So you will definitely see that I'm exposed to the businesses that you would also see me having a governance role in Jamaica. I would say that I enjoy things that are more active, and I'm biased towards investing in businesses that I understand and assets that I understand, which are physical, like real estate to some extent, and owning businesses or investing in businesses in which I influence outcomes. I only as a matter of diversification and almost duress do I do passive things. And I don't have any real appetite for unproven opportunity. I'm not somebody who's going to buy cryptocurrencies or do startup venture type investments. And so even when I'm investing in public markets, there are things that have pretty stable and well-established cash flows. And the valuation suggests that it's misvalued for one reason or another. I don't disappoint you, but that's really why
who you are is who you are. So
who can talk about cryptocurrencies and other speculative things and how much of their portfolios in artificial intelligence, and but this ain't that guy. Sorry.
Okay. So I'm curious. Since you mentioned it, artificial intelligence. Is that something that you think about or look at all? Is it something that you view as maybe still in the early stages? What are your thoughts on it? Because everybody is kind of, it's almost like you are required to comment on it as a company in terms of your strategy, at least for the startups. Where do you view it though in terms of its relevance to how, I guess, well, just your thoughts on it, I'd say.
I think it's real and relevant and present. My investment strategy doesn't really immediately depend on it. So, I think it's real. I think a business like ours needs to hire some millennial to tell us how to optimize AI with the business that we're currently doing. And we'll get around that at some point relatively soon. But we're not planning to create AI as a way of, we're not going to monetize our own investment in AI. But that we do can definitely benefit from AI. And, I'm sure that in a few years, this interview, I'll have my avatar talking to you. But I'll be using the time that I save to continue to do property and logistics and the things that I'm doing now.
Okay. So in terms of reading, listening to podcasts, etc., is there anything on your reading list now? Are you listening to any podcasts? Anything that you do for personal development or anything along those lines?
I mean, I used to spend a lot of time reading for what you might call personal development. There was a time when I was reading business biographies obsessively. But I would say now what interests me, so I read Going Infinite, which of course many people would have read recently, which is a Michael Lewis book on Sam Bankman-Fried and the implosion of his business. But that was just raw entertainment. Anything that by Michael Lewis is a fast-paced, almost novelesque read. It was exactly in the build, and it was lots of fun, and I recommend it to people who are interested in that kind of investing. Although for me, that was a story of what not to do. But I listen to a lot of economics stuff and philosophy. It's a great podcast by a professor of economics, but he's a polymath, by which I mean he has very wide interests from art, food to philosophy. And I'm not the only Jamaican that listens to it, so it's something I share with friends. But he has a great podcast called Conversations with Tyler. His name is Tyler Cowan, as I mentioned, and it's philosophy. But I'm a religious listener to that one every couple of weeks. I really like the Economist and the Wall Street Journal podcasts. But of course, I read a wide range of periodicals daily. The Journal, the FE, the Post, and the Times, and obviously the local stuff as well. But yeah, those would be two good examples: Michael Lewis and Thomas Tyler. And the Wall Street Journal has a great daily update. And in fact, they're doing a series right now on AI that is fascinating and very much on point, given what happened with Sam Altman recently at OpenAI.
Okay. So the reason why we ask, and I like to share this, is that what we're hoping to do, this is actually our 41st interview in our CEO series. So I'm hoping to compile like a reading list or our podcast list to share with our community, to say these are the ones that our CEOs are listening to. Maybe you should check them out, tell us if you like them as well. So it's just something that, helps us to expand our knowledge and exposure to different topics and podcasts and reading, it's just something to help us know a little bit more, right? And again, to get into the mindset of our CEOs that we speak with, right?
Well, that sounds awful. Yeah. Looking forward to seeing that.
Yes. So the final question that I'd like to ask you is that you serve in quite a number of capacities as chairman, as a CEO for the Panjam Group, etc. I'm very interested to understand how you manage your time in terms of productivity. How do you keep everything together? It's something that I find that persons typically struggle with, myself included. So how do you do it, and what would be, I guess, a tip that you could leave with us so that we're able to be more, I guess, both productive and effective with our time?
I don't really have any great tips because I don't really think of myself as doing all that much, even though I think on paper it's perceived that way. Um, I would say that a structure for overseeing businesses that is pretty efficient, and you use that structure for interacting periodically, and it's heavily pre-scheduled. And so I interact extensively with businesses kind of on a monthly basis, all of them. And there's a template for the conversations that I want people who run the businesses to have with me. And then everything in between is just an ongoing conversation with the leaders of the businesses that I ultimately run. And I would say the tip for me is that I enjoy what I'm doing, so I don't really perceive it to be work when maybe if I felt it as work, I would be in denial or procrastinate to a greater. But so much of it is fun that it keeps me interested.
Yeah. You said
So I don't have
something.
any great advice beyond that. The only thing I
No,
would say
that
is that the business I'm involved in, there is a little bit of a kind of seamless interaction between them. So if you have, deep knowledge of what's moving through the ports, for example, and so you're understanding how car volumes in Jamaica moved, well, that will give you an insight on what your on loan book should look like if you're in a commercial bank, and it will also, give you a sense of consumer confidence more generally, even if you're selling food, and it all kind of comes together. You'd understand property if you have a sense of mortgages, and you also have a sense of what's coming through the port in construction inputs, and maybe you're involved in other kinds of consumer goods or aspects of hardware. And so for me, it's really not moving from one business to another. It is really a continuum. A conversation about exchange rates in a consumer business heavily impacts your efficiency of reading a board pack about, impact of exchange rates on a finance business, or on capital investments that you're about to make, on loans that you're about to borrow, on the currency you're going to choose to take a loan in, on the impact of the exchange rates on people's likelihood of buying what you're buying. So I think there's an opportunity to organize your career to understand the greater system that's at work in where you wish to be exposed. And a few people, myself included, have a pretty good exposure to the overall system. And so every interaction feeds on the other one. And that's fun and relatively efficient.
Yeah. It sounds very, very powerful to me. I think that personally, I'd say I struggle with, as I mentioned to you before, balance, and balance in the sense that I feel like, so I do enjoy what I do as well, right? I enjoy the work that we do as Learn, Grow, Invest. I love it. I could do it all day, but I do sense this almost, I guess, a desire or a pull to spend time with family. Their friendships that feel like they haven't been nurtured. There are sports, that I'd like to play or watch, and it just feels like, I guess maybe I'm still not fully decided as to what I would want to focus on, because there is this mindset, I guess, for me, where if I'm working all the time, I'm gonna miss out on things that maybe later on in my life I'd view as maybe something more valuable. Like I don't know, it's kind of maybe it's the wrong mindset, or maybe it's shaped by something that I'm not aware of. But I did have earlier in my career a business that failed, and I worked really hard at it. But at the time, I had to choose, make a really hard decision to close it. And I think maybe, I guess, in having this conversation with you, maybe I need to reconcile in my head as to whether or not it was that I was working too much, or maybe it failed for other reasons that has nothing to do with me personally, but that maybe it just wasn't a viable business. But I think what you said was very powerful, because what it says to me is that you do have a system, right? It sounds to me like you have a system, everything complements each other, and your perspective is that you view it all as related. So it's not like anything is trying to compete with the other, because they're all related to each other. And so you're doing one thing in your mind instead of multiple things that may make it feel like you're doing too much. So I took a lot from what you said. So thank you for that. It was powerful for me. Anyway.
Well, I don't think you're the person that I think that the love of what you call work, for me in my life, is a replacement for a healthy family life. That's a healthy family life is very important to me, and we have a lot of fun as a family too. And so that I try to keep that in balance, and definitely believe that. Although I don't think of it as, I guess I don't really organize myself to think that I'm prepared to spend time with family or pressure to go to work at 6 o'clock in the morning or anything like that. I just need to do what I need to do. And as it turns out, I think I am devoting an appropriate amount of time to my family and to work. As far as the experience that you described of of business failure and business success, one of the things I've had my fair share of setbacks as well, and I do think that knowing when to exit something, an activity, and getting it over with quickly, I decided I'm going to be relatively good at that. Although I do have still examples where I could do better, but deciding what you're not going to do and when you're going to stop doing things adds to your efficiency, because a lot of stress is caused by uncertainty and by lingering things that are unattended to, or about without definite answers. So as far as businesses, if I'm in a business that does not have what I call a well-lit pathway to a positive cash flow, and that doesn't mean it must make a profit, but if I'm putting money into it continuously and I don't know within a period of time that's well-defined how I'm going to turn it around, then for me it's not really complicated. I just have to exit, and that relieves me of stress and allows me to pivot to doing something else. And a large part of the story of Jamaican producers has to do with us taking some decisions relatively early on, say in the first year or so of me becoming CEO. There were a few things we needed to stop doing relatively quickly, and then start doing things that I found more fun and more rewarding. And I suppose there was a counter narrative in which I could have gotten stuck doing these things, and I would have found it very unfulfilling. And I'm sure I would have spent more time playing golf.
Yes. So it's interesting. Again, this conversation has helped me so much. It is for our community, but I like to say to persons that I ask the questions that I'm interested in as well. So a lot of the things that you've said has helped to shape my perspective on business, on how to look at companies in terms of strategy, and just understanding how you view the world of business and everything else. So thank you so much, Jeffrey. It was a great conversation. Is there anything that you'd like to say in closing? Anything that maybe I didn't ask that you'd like to share? I'll give you an opportunity to say final words.
My only comment would be that I need to come to conversations like this with a tremendous degree of humility. It's very important that people who listen to me don't think that I have all the answers. For me, it's still a work in progress, and I would bet that you listening to this podcast would themselves have good ideas for me too. So I try to keep an open door. I try to make a lot of time for people who might appear relatively experienced or younger than me or spend less time in the business world. And I try to make time for them because I believe that they can teach me just as much as I can teach them.
Okay. Thank you for that. I definitely can attest to that, because when I saw you at the airport, there's always this thought that says, do I approach him? He's working. Am I going to take up his time? But you were gracious, and we were able to talk for quite a while. And you didn't seem like you were trying to just appease me. You were actually interested in what I had to say, and we had a great conversation. I actually posted about it on social media because it had that impact on me for the moments that we're able to talk. So I do think that you have demonstrated that what you just said, and as I said, I'm grateful for the conversation, and I'm sure that our community members will agree that it was a great discussion, and great to hear from you as well.
But one of the big secrets, Jermaine, is that a lot of very successful entrepreneurs that you'll see in Jamaica and elsewhere in the world achieved a fair degree of relative success when they were pretty young. And that's how you kind of know them, because they've been on the scene for a long time. And they remember that when they were young, they were banging on doors and punching above their weight to get into the offices of all sorts of people. And I think you'll find that people who have kind of positional power now, that have been on the scene for a long time, are surprisingly willing to take a call or take a meeting from people who are making their way in the world, because they realize that even then they themselves had a lot to add, a lot of value to contribute. And so they're going to see that they can harvest value from those interactions themselves.
And that has certainly been my experience. So I'm grateful that I have the opportunity to speak to you, to speak to others in your capacity. It has helped me a great deal in shaping Learn, Grow, Invest and what we do. And I look forward to more and more conversations, because the more of them I have, the more I can learn and do a better job for our clients and our community. So thank you so much, Jeffrey. I hope you do enjoy the rest of your day.
All right, enough respect. Take care.
I really hope you enjoyed this conversation as much as I did. If you did, be sure to like the video, share this video with someone who may be interested in learning more about Pan Jamaica, learning more about what they do. And I encourage you to join our mailing list. We send out emails to our community of investors on a weekly basis. And it's something that helps us to keep in touch, right? So be sure to subscribe to this channel, join our mailing list, and you are invited as well to join our community groups on Facebook, LinkedIn, and Telegram. Thanks for watching, and I'll see you in the very next video.